Welcome to the roundup of day number two. Right, and for those who have been following updates, I made one trade today, and that trade would have been trade number four on the prop firm funding challenge. Right, these days are pretty much counted as trading days, so a trading day pretty much resets like around 7:30 each evening. Right, and for those who have seen the updates I made, the trade I entered would have been on gold, right? And I think I entered this trade around 9 p.m. last night, right? So let's go to the charts to show you what it had looked like. All right, I entered this trade around 9 p.m. last night. I didn't actually hold a trade for the entirety of this 235 pips thereabout. I closed out around halfway. So I've mentioned before that when I enter a trade, I enter two positions, and just for easy trade management. So I usually take one of the positions halfway through the target, and then I would leave the second trade to run the full length of where I want it to go, or where my target is, right? So last night the first trade would have been, the price would have gotten to that halfway mark, and it would have closed out automatically by the system, right? The second trade, however, I did not actually hold all the way, and I manually closed it. And let me tell you why I manually closed it. At least this was my thinking. All right. So this week is actually a jam-packed news week. And I mean, as we continue to go along the journey, I will explain to you how news impacts the market, right? So there are fundamental data-related news that comes out that can impact the market. And there's a major news data point coming out this week, which is the Fed's rate. So the U.S. Reserve Bank, or the U.S. Central Bank, we call it Federal Reserve, will be making a decision around policy rate. And again, the policy rate is what determines pretty much every other rate in the market, or the price of money, how much it costs to borrow money, how much interest you pay when you borrow money from a bank, businesses and individuals. The policy rate impacts that, and so that kind of data can drastically impact the market. What I've seen before is that when the news, when it's coming closer to the news, like the first 2 days preceding the news, the market really just slows down. Nothing really happens. Market kind of slow down. If you look at my other pair that trade, which is GJ, you'll see that it pretty much been going sideways. The market been going sideways, right? So it's going sideways, not a lot of movements. And you want to stay away from these markets. Like, we trade trending markets. That's where the opportunities are, when the market is trending and moving, right? So you want to stay away from these markets. So because I became aware of that news coming out tomorrow, which is Wednesday, it's coming out tomorrow, I decided that, you know what, let me just close the position. Let's not get greedy. It's early in the process, early in the challenge. Let me just close out this trade. And so I manually closed it around the same 115 pips, right? And yeah, that was really it. That was really it. So let me just show you where the progress is on the actual account. So as you guys would have heard, if you had watched the video explaining the prop firm, the profit target I need to make on this account is $1,000 in order for me to get actual live account for $10,000, where I can trade and earn real money. So right now you're seeing is simulated profits. I need to get to $1,000, and I need to get to $1,000. So I'm currently at 34% of that target. So I've made $344 in 2 days from on top of the account, the starting balance on the account, right? And then this is the dashboard for the prop firm. It shows some other details like your beginning balance, your current balance, your equity, the profit target, the maximum drawdown, maximum daily loss. If I bring the account below 9,700 in 1 day, 124-hour period, I blow the account. If I bring it down below this overall, I think these numbers are a little wrong. Well, no, because this is actually the maximum loss is actually considering the profits I've actually put on the account. So I'd have to lose the profits I've made on the account, and then draw it down even further, right? So that may not be accurate, but yeah. And then it also shows how many trades I've taken and how much I've lost, right? So I've lost 50%. The thing about this, I've lost 50% of the trades I've taken, right? And then the reason why numbers is so, I was saying, remember I'm saying it's trade number 4, but because for each trade I enter 2 positions, it's counting these positions as separate trades. But for us, and for us, it's 4 trades. Because really it's the same setup, same, this reason why I enter. It's just that I split the position into 2. So it's really 4 trades, but counting twice because I've entered 2 positions for each. So I've lost 50% of them, yet still I'm up 34%. I mean, I'll explain why that's the case. I guess I'll explain in another video. Again, I'll use terms that I'll eventually have to explain, but that's when you have a proper risk to reward ratio. So, I mean, with any form of investing or trading, you always want to minimize your risk, or you want a situation where your risk is minimized and there's a potential for maximizing the rewards, right? So risk to reward ratio. I'd have mentioned that I risk $100 on each trade. What I try to do is, if I'm risking $100, I'm going for at least $300. Right? So you want to minimize. Yeah, you're going for at least $300. Yeah, and that's what's here. And even if we look, and that's why I'm ahead, right? If you look at my history, if you look at how much I've lost, right? And then these are small loss. I was risking a whole lot less on these trades. So the highest loss I had was $26. Right? But yesterday when I was winning, I'm winning like at least 3 times, 4 times more than what I was risking. And that is how you stay ahead with the trading thing. You don't need to win every single trade. Literally, you don't need to win every single trade. And the reality is that you can enter a trade. You can literally follow your strategy to the T. It just doesn't work out. The market does what it wants to do. The market does what it wants to do, right? So losses are a natural part of trading. Every strategy has a natural distributions of wins and losses. A 50% win rate is actually really impressive. I don't know if I'll be able to. Chances are I won't be able to even maintain this, and I don't need to be able to maintain it as long as I ensure my risk to reward ratio is always 1 to 3. All right, as long as I make sure that my risk to reward ratio is always at least 1 to 3. Sometimes 1 to 2, even 1 to 2 would work, but 1 to 3 is what I try to go for. I don't know if I'll be trading day number 3 because I said the news comes out tomorrow. The market is usually very volatile when the news comes out. I've had too many experiences where my account have been completely blown because of news. So I kind of tend to stay away from it. So, I mean, but if I do trade, of course, you guys to the short. So what I want to do is because again, the trades, they come up. I look at the market, I see something, I enter it. So I'll be sharing those via like the 60-second shorts to show you when I've actually entered, and then use the shorts to give you updates as the trade progresses. And then I'll use the videos where I give an update, that a daily roundup and stuff like that. I might end up having like a weekly review where I show what happened in the week and then what I'm looking for going into the following week. So guys, stick around. Let's see if I can continue to be consistent and finish this challenge. I've been here before, so just add, I've been here before, right? Winning trades is not my problem. Winning trades over time is my problem. Winning trades consistently over time, right? So I've been here before, not really moved by having actual gains, but let's see if we can finish out this challenge strong. So until Until next time.